Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and the focus today is on crude oil prices, where we've seen some profit taking finally come in as the Brent price has tried getting towards $96 a barrel. There also is a UBS report which suggests that clients should be taking profits above 95, and that's exactly what we saw happen as well. While the momentum could still be on the higher side, but the markets also are taking cognizance of the kind of economic data that we have been getting. Add to that the fact that OPEC and Russia output cuts at 1.3 million barrels per day till the end of this year are supportive. So is the fact that Russia is considering export duty of $250 a ton on oil products there. The markets have been looking at weak economic data, as I told you. So whether it's going to be about manufacturing, construction numbers that we have seen come in from China, US and Europe have been on the weaker side. The US output also is estimated slightly weaker, and Saudi Aramco also has worked towards saying that the global demand outlook by 2030 now is estimated or projected at 110 million barrels per day, which was earlier said at 125. The markets also are looking at various central bank meetings this week itself. You have US Fed announcement coming in today in the evening, and then you also have Bank of England, Japan, Sweden, Switzerland, China, Norway, all of those monetary policy meetings between today and Friday. So it's going to be a choppy ride until then. Joining us to decode all of that is Dharmesh Bhatia from Emirates NBD. Dharmesh, thank you so much for joining us. You're joining us all the way from UAE, and that is really the hub, and most headlines really seem to be coming from there as well. But at these current prices of nearly $95 a barrel, what's your sense with the bit of a profit taking that we have seen on where could the prices be headed?
Hi, Manisha. If you see, the price has almost topped out, almost 10 months high. But have you noticed that yesterday there was an expiry and there was a backwardation which could have seen in the market? But again, the market has recovered very sharply on the second month, and the market has been in the contango thereafter. I'm expecting the trend to be still firm, and with winter coming on the edge, no doubt there is a monetary policy, dollar getting stronger. But on the other hand, the only one product which is moving is oil. From last 2 weeks, the price has rose almost 10-15% volatility has seen the price. And if you notice, the price is still showing firmness and holding about $19 about on WTI. I'm expecting the range to be still firm in domestic market with price holding about 7,000 rupees. You can expect the range to 8,000 to 8,200 in coming weeks, especially in the winter season. And if the demand still keeps on in a flattish zone where market is expecting that there will be no demand going ahead, but there will be a supply constraint, which already Saudi and Russia has done it. The price has artificially been held at highest level. So in winter, I'm expecting the price to go further high. Maybe you can expect the price to touch $100 in Brent, where in domestic market, you can see the price crossing 8,000 rupees. So I'm still bullish, and I will go with the trend.
Okay. Dharmesh, we all know that there are 160 crude varieties, and something somewhere is trading in discount or premium. And yes, Nigeria and Norway crude varieties, Malaysia for that matter, are trading above $100 already there. We've seen 10% of gains in past 1 month, 30% of a jump up in crude prices in last 3 months. How soon do you see that 100 mark coming in that you talked about?
I'm expecting the month of November with where the market will spike very sharply because of the winter's time. But again, you have to keep a close eye on the next year election also. US and again India. US never wants the price to be at such a high level where the inflation will keep on creeping up. So on an average, I'm expecting that they will start supplying, offloading their extra oil, and that could be a turnaround where the market will see a U-turn. But that is still in the news market, but it's not been confirmed yet. Till that time, again, the supply has been a major constraint, and that's the reason why the price is still showing higher and higher continuously. If they keep on closing and cutting down the supply cuts, the price will still go on. On the other hand, if China reopens and if China says that we have started, and still, if you see last week they have reduced the CRR, and if they support the industry and economy, you can see the rally can continue to 110, 120 also. It's completely on the base of demand and supply. Currently, price is holding because of supply constraint.
And while you are also bullish into the markets here, and it's very contradicting on what we're talking about right now. So with the output cuts, with the demand expected on the lower side, especially from China, interest rates staying higher for longer scenario there, what is your range then? $100 is a possibility. Would you say that we've made the bottom also for the near term?
If you have noticed, the price has rallied very sharply in last 2 weeks. It's completely because of the supply constraint. But if you notice, at this level, the inflation has started creeping up, and you can expect the rate hike again. If the rates keep on creeping higher and higher, the industrial demand, if you see, the cost of borrowing will go very high, and then again the industry will slow down. So there will be again a demand crunch. There will be no demand in the market, and you can see a topish zone of $95 to $100. So I'm expecting this will be a closeout price where market will maximum go towards 100 Brent, which is more $5, making half a 5 to 6% more higher. You can anticipate in the price, because the forward months are already on the backwardation. I'm talking about March 24 to June 24. The price has started showing a U-turn, which anticipates the price has been a top out level.
All right, Dharmesh, a final question then. And what's your sense on the Indian demand going forward? Because the last 3 months have seen a decline in demand. The monsoons clearly is not a very favorable period as well. But as you mentioned, with elections coming in for India and US, we do not want to see $90. 80 perhaps is a more fair prices here. Do you see those levels coming in yet again?
See, India is completely on the international base price. We cannot manipulate the price. We are completely on a demand side. And with the growing economy, the demand will always be rise. In the trade deficit side, oil is one of the major component where the India trade deficit hits. But you can see the market can slow down a bit. But again, the international market, if keep on going up, the demand may come down, but the price will still go higher and higher because we have defect. So I'm expecting the price to breach 8,000 in coming month in domestic market, because if the oil starts going up, the rupee will depreciate and it will give a double impact on the INR MCX price. So you can anticipate price to heading to 7,800 to 8,000 in coming days.
All right, so that's very, very bullish view coming in for the prices there. Thank you so much, Dharmesh, as always, for catching up with us here at Moneycontrol. So the prices are expected on the higher side. That's exactly what various banks and brokerages also are suggesting. So whether it's Bank of America, Citi, Goldman Sachs, even UBS, which yesterday told its clients to take profit above $95 a barrel, does say that 90 to 100 of a range is what you could see in crude prices for the rest of this year.